Good evening, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for the evening, as we're here on Tuesday, the 11th of June, 2024, getting on to 5:50 p.m. Central Time. So we're looking at markets, all of them. They're going to be looking in the financial arena tomorrow at the market reports. Now, let's go right to them. You start off with the Mortgage Bankers Association numbers at 6, but then we get the May Consumer Price Index data, and that comes out at 7:30. I've already written to my subscribers, and that's why I can't show you the numbers there as to what they are and blah, blah, blah. But understand, it's going to be a risk-on or a risk-off day because of that. In part, you're going to also have the FOMC meeting at 1 o'clock. That's certainly going to impact it because you're not only going to get what the decision is, which is widely expected to be sitting flat, but it's the dot plot and then what questions are asked and answered by the Fed. Are they going to sound hawkish, dovish? Is the CPI going to be hot and they've got a problem with really sticky inflation? Or is it finally broken and the Fed chair is going to be sounding very dovish, like finally we think we're getting where we have to be? I don't know the answer to that. They already know. The odds are they've all seen the CPI numbers already. They've made their votes. They finish up their meeting tomorrow. If they haven't seen the CPI, then they'll get it right now, first thing in the morning. We get the big grain report. And for you grain traders, often the May report gets revised in the month of June. And recently it's been bigger numbers in June. Will that pattern keep holding? I don't know. The Treasury Department, outlays and receipts at 1 o'clock. API already saw that this evening at 3:30. It came out a decline of 2.428 million barrels. They were looking for a decline of 1.75, and we'll get the EIA numbers in the morning. Today we had both OPEC come out with its ideas to what energy prices should do, and we had the EIA come out. So, in a nutshell, OPEC thinks demand will go up in the second part of this year, 2024, and EIA says the U.S. will produce more oil the rest of this year and into next year as well. So OPEC can sit tight. We're going to make up some difference there. We will see how this all works out. And remember, the Biden administration has put out tenders. I don't think it bought anything yet in the oil, but we'll see. My guess would be they didn't because prices have been rallying since they made it known that they had put out the tenders. Metal's getting a rally, but can you trust anything? And the reason is tomorrow's either a big risk-on, risk-off day. By the end of the day, we'll have an idea. The CPI will be the market mover. If it comes out as expected, you might just be flat. But anything either side of the mean expectation, which I'll discuss in the morning, I keep certain things for my subscribers, my paid subscribers, and I'll let it go with that. Dollar has been up, and as you know, most currencies have been under pressure since the U.S. jobs report came out. So if we take a look at the S&P, if it ended up just like this, you're in an all-time high on a closing basis, but you won't end up like that. You have an inverted head and shoulder formation in the S&P. A shoulder. The head's pointing down. The other shoulder. If you flip this up from 5,200 to 5,400, it would carry you up to about in this range. Right in here, because you take the shoulders. Now, I'll make it up that it's 5,400. It's lower than that. But that's about where it would carry probably right up into this area. And that's the way you look at it. The pattern's broken if you take out right here, this break low. Then the pattern doesn't exist. Any move up from here, I activate that, and that's where I think you're going. So I'm comfortable then in saying the 5,500 level is a minimum would be the target until that low is taken out if the market can hold up tomorrow. As a chart pattern goes, all right? I have other work, obviously. The trend is up. You have higher lows, higher highs on the swing line. The market is fighting a battle at the 18-day average, over it, back under it, over it. So the bias is up, the trend is up, the resistance is right here at the Bollinger Band. And you're going into the report against that resistance, and you have momentum that could embed tomorrow. So tomorrow's a key day in this market. It would be the third day where both numbers are sitting over 80. Now, that's super important. At the end of this video, I'll have an ad about my enhanced Bollinger Band course. All I can say is it's so easy to learn, and it'll start making sense to you whether you're trading futures, stocks, ETFs, spiders. All of a sudden you'll go, I get that now. I see why markets stop at certain numbers back and forth. But you got to learn to tie with it, in my opinion, momentum. Very important with it. We then get to the NASDAQ. Well, like the S&P, it's bucking up against the upper Bollinger Band, certainly in an uptrend, not a head and shoulder formation, but also can embed right here, but not so in the Dow, which is underneath key moving averages, and we just had a crossover for the moment where the 18-day average just got under by 16 points to 100. But you know, tomorrow anything can happen and move this all over the place. When you get two big events happening that can move markets, you buckle in and you go, oh boy, I got to be careful with my trade tomorrow. Don't want to blow my account up if I get on the wrong side. And then there's the other element. I don't want to let this volatility go by me. I want to step into these markets and be positioned because this is what I think is going to happen. That's what makes the volatility of the day. If you looked at the rates on the options, what they're projecting, about a 1.5% volatility tomorrow on the S&P. So you can always get that and look those up yourself. When you look at the micro mini Russell, lower highs, lower lows. So this has been bearish. Why? Because interest rates have been high. And the enemy of this, smaller cap companies, interest rates do damage. And that's where you're at. Doesn't mean it has to stay down. But we can see the resistance area going into these reports is 2052 to 2063. In the 10-year note and the 5-year, same patterns. You went from lower band to upper band, back to the 18-day average, not trending in both of them. Difficult. Well, this one's actually got a small uptrend, but you end up in a downtrend if you step under this number, and the same is actually true right here. If you take out the lows of Monday, you're in trouble in those markets and could go to the lower Bollinger Bands. What would do that? A super hot set of CPI numbers, meaning that the market is saying, nah, the Fed can't do anything maybe this whole year. That would do that number. What would kick the market up into the stratosphere? CPI's back is broken. This is it. That's how the market's going to look at these things. Dollars all over the board. This is the result of going into a jobs report that turned out to be an absolute shocker of a report. Market first collapsed and then came back after the report was released up to the Bollinger Band, and you're stuck. And you know it's going to be the flip-flop right here in the euro because 57, 58% of the dollar index is made out of this, so they go opposite each other. In the British pound, does it get more neutral than sit at the 18-day average to see what the Fed's going to do? And that's tomorrow's where a lot of trends are going to get set up potentially. Higher high, lower low in Bitcoin. And the key in this market was I thought it would go back to 70,000. It certainly did. And it decided today to extend that. And I said in the morning update, well before you were down there, I said if it's going to extend, they'll probably go to the Bollinger Band and try to find support at that level. And it did. When we get to the crude, well, the narrowing of the spread again. We had today both OPEC come out and the EIA. OPEC said that they see increased demand kicking in at this part of the year, the second part of the year, 2 million barrels a day or so. EIA came out, and they're expecting the U.S. to be able to produce more oil in the second part of the year. So OPEC, stay with your production, cut there for your Brent, and we'll throw more oil up. And as the two keep that relationship of about $4, our producers do very, very well with that, as you can see. So we will see how that all works out. Then you get to the RWTI, and you can see where your resistance points are. Gasoline, the big area, first level of resistance, 18-day average, then the green, the 100-day average. So you're coming up into that. You know, all of us are surprised. I think that would be the right word, that you haven't seen prices really take off for the summer driving season yet, and they haven't. I mean, yes, they've come off their lows, but the retail market hasn't shown that very much, which is interesting. And in that gas, I caught this play on the UNG. It was a better setup than the futures in dollar risk. That was how I looked at it. What was the risk? And I couldn't get the risk here in the parameters that I'd like you to take on. It was staring you in the face in UNG, and we went into that in my subscriber report. And if you haven't had it, remember you can get it free at any point, and the positions are still open on it. But I've been cutting them down for the past 4 days, where now I want you to go into tomorrow only 25% long. Now, what does that mean? If you had 100 shares on this rally, had you take off a bunch. Normally, I'd have you to come out of the whole market, because this type of action is where I teach you normally come out. But there's a weather event right in front of us. Not going to happen. It's happened out west, and it's about to move right now into the Midwest. It's already down south. They're setting record temperatures, Florida, Alabama, other areas. The rainfall events are beginning, and this weather is going to hit New York and the East Coast, and that's going to create one more level of demand. But you're on borrowed time to buy it up here, in my opinion. I think you can do better than that, but if it goes, I don't want my clients left behind. So as you know, I keep talking about, hey, this Bollinger Band idea. How do you play that when you get these moves? Well, it's simple. I've given you a course with this charting software right behind me, access to the morning videos when you come in. It's Father's Day. What a gift for somebody that you like. How do you get it? Go to our website, iraepstein.com. Under the word courses, it's right there. Or you can move your cursor to the top here. And here's an ad about that, and that icon will be there all through this. You have yourself a good evening. I'll see you in the morning. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for